Australia, a nation known for its economic resilience, is currently facing one of the most challenging financial crises in recent history. The year 2025 has ushered in a period of economic uncertainty, with inflation, housing market crashes, job losses, and business closures shaking the foundation of the country's prosperity. While economic downturns are not new, the scale and speed of this collapse have raised alarms across all sectors of society. Are you at risk? And what does this mean for the future of Australia? Let's explore the key factors behind this crisis, its consequences, and potential solutions. The root causes of the economic collapse. Number 1. Housing market crash. The Australian housing market has long been one of the most expensive in the world, with cities like Sydney and Melbourne witnessing unprecedented property price surges over the past 2 decades. However, in 2025, a sharp decline in demand coupled with soaring interest rates has led to a dramatic crash. Many homeowners who purchased properties at peak prices are now struggling with negative equity, meaning their homes are worth less than the mortgage they owe. Banks have responded by tightening lending conditions, making it even harder for new buyers to enter the market. This has caused widespread distress, as property investors and homeowners alike are forced to sell at a loss. With a significant portion of Australia's wealth tied to real estate, this crash has had a ripple effect on the broader economy. Number 2. Rising interest rates and inflation. To combat inflation, the Reserve Bank of Australia, RBA, has aggressively raised interest rates, making borrowing more expensive. While this was intended to control consumer spending and stabilize the economy, it has instead led to an increase in mortgage defaults, reduced business investments, and slowed economic growth. At the same time, inflation remains stubbornly high. The cost of essentials such as food, fuel, and utilities continues to rise, putting immense pressure on household budgets. Families are finding it harder to make ends meet, with many cutting back on discretionary spending, further weakening the economy. Number 3. Collapse of major industries. Australia's reliance on key industries such as mining, tourism, and construction has also played a role in the downturn. The global demand for natural resources has declined, affecting mining exports, a crucial component of the nation's GDP. The tourism industry, still recovering from the pandemic and climate-related disasters, has been hit hard by declining international travel. Meanwhile, the construction sector has slowed due to high material costs and reduced consumer confidence. These industry setbacks have led to widespread job losses, with unemployment rates reaching alarming levels. The lack of job security is further exacerbating the financial stress faced by Australian households. Number 4. Declining business confidence and investment. Investor confidence in Australia has plummeted, leading to a significant reduction in foreign and domestic investments. Businesses, particularly small and medium enterprises, SMEs, are struggling to secure funding, resulting in closures and layoffs. As more businesses shut down, the economy enters a vicious cycle of declining productivity and rising unemployment. Number 5. Government debt and policy failures. Despite efforts to manage the crisis, government policies have been inconsistent, with stimulus measures proving insufficient to prevent a full-scale collapse. Australia's national debt has surged due to excessive spending during the COVID-19 pandemic and subsequent economic recovery packages. Now, with limited fiscal options available, the government faces difficulties in providing adequate support to struggling businesses and households. The consequences of the economic collapse. Number 1. Unemployment crisis. The economic downturn has resulted in job losses across multiple sectors. Young professionals, middle-class families, and low-income workers are bearing the brunt of this crisis, with many unable to secure stable employment. The rising unemployment rate has led to increased reliance on government welfare programs, putting further strain on public resources. Number 2. Homelessness and financial hardship. With mortgage defaults on the rise, an increasing number of Australians are facing eviction and homelessness. The rental market, already under pressure, is unable to accommodate the growing demand for affordable housing. Families are being forced to downsize, move in with relatives, or seek emergency shelter. Number 3. Business closures and economic slowdown. The collapse of many businesses, particularly in retail, hospitality, and manufacturing, has contributed to the overall economic slowdown. Consumer confidence has plummeted, leading to reduced spending and further weakening of the economy. As businesses shut their doors, job opportunities shrink, and the cycle of economic decline continues. Number 4. Social and mental health impacts. Financial stress is taking a toll on Australians' mental health, with anxiety and depression rates rising. Families are struggling to cope with job losses, debt, and uncertainty about the future. The demand for mental health services has surged, but funding remains inadequate to meet the growing need. Number 5. Declining international standing. Australia's economic troubles have not gone unnoticed on the global stage. Foreign investors are wary, and international credit rating agencies have downgraded the country's financial outlook. This has made it harder for Australia to attract investment and negotiate favorable trade deals, further complicating economic recovery efforts. Are you at risk? Given the widespread impact of this economic collapse, many Australians are wondering whether they are personally at risk. Here are some key indicators. If you own property, a declining housing market could result in negative equity or foreclosure if you cannot keep up with mortgage payments. If you have significant debt, rising interest rates could make it harder to manage credit card bills, personal loans, and business debts. If you work in a vulnerable industry, job losses in construction, retail, tourism, and mining are particularly high. If you have limited savings, a lack of financial buffer could make it difficult to navigate job loss or rising living costs. How to protect yourself. Number 1. Reduce debt and cut unnecessary expenses. Paying down high-interest debts and cutting back on non-essential spending can help you stay financially stable during uncertain times. Focus on necessities and build an emergency savings fund if possible. Number 2. Diversify your income sources. If you rely on a single income stream, consider exploring side businesses, freelancing, or investment opportunities to create additional financial security. Number 3. Stay informed and adapt. Keeping up with economic trends and government policies can help you make informed financial decisions. Consider seeking advice from financial professionals to better navigate the crisis. Number 4. Strengthen your job skills. With industries shifting, upgrading your skills or considering a career change could improve your job security. Online courses, certifications, and networking can help you stay competitive in the job market. Number 5. Seek government and community support. If you are struggling, don't hesitate to seek financial aid, housing assistance, or mental health support. Government programs and community organizations offer resources to help individuals and families cope with economic hardship. The economic collapse of 2025 has left Australia facing one of its most significant financial challenges in modern history. While the road to recovery will be difficult, individuals can take proactive steps to protect themselves and their families. Understanding the risks, adapting to new realities, and making informed financial decisions will be key to weathering the storm. The resilience of the Australian people will ultimately determine how quickly and effectively the nation can recover from this crisis.